Hello traders, today is July the 4th. My name is Evan Hornsey, market analyst YouTrading, and today I'll be looking at the week ahead. Okay, I'm going to start with the YouTrading.com Forex heat map. We can see that the Australian dollar is currently strong across the board. Japanese yen is the weakest. So if you're going in long Aussie versus the yen, looking to see if we can get equities and commodities to go higher as we're starting the week risk on. Going to the economic calendar, we can see that the Swiss franc CPI month over month came in slightly higher than expected, but lower than the previous reading, which might have a bearing on why we're seeing the Swiss franc and the yen coming lower today. If you look here, we've got US on bank holiday. Obviously, they're celebrating the 4th of July independence from the British, so we're not expecting much from the US session at all. So if we do get news headlines, probably going to see quite a muted market today. Then tomorrow, cash rate and statement from the RBA. We're expecting them to raise rates by 50 basis points. Last month, they raised by 50, but we were expecting 25. So if there is a surprise today, if there is a surprise tomorrow, then it'll be either 75 basis points or lower at 25 basis points. The market is obviously trying to price in the 50 basis point rate hike as we're seeing strength going to the Australian dollar today. Looking down, we've got Bank of England Governor Bailey speaking at 11 a.m. tomorrow. Not expecting much from that. He might utter that the Bank of England could raise rates by 50 basis points, but they're more likely to raise by 25 basis points at the next meeting. Then on Wednesday, we've got JOLTS job openings. Not expecting much from that. Maybe the Fed have started to kill demand, which will kill job openings in the future. The market is expecting 10.85 million, down from 11.4 from the previous month. Then if we look down, we've got ISM services PMI also expected to come in lower than the previous reading, along with the ISM manufacturing from last week. That would mean that the composite is lower. And then the pivot for the US dollar this week is probably going to be FOMC meeting minutes. So if we're coming into the meeting minutes strong, then maybe they'll weaken it into the non farm payrolls on Friday. If they go in weak into the FOMC meeting minutes, maybe they'll start to strengthen it. Just kind of depends on the way the market's been set up ahead of the meeting minutes release. I just think we've seen it before where these meeting minutes, once they're released, the algos look through it really quickly and then start to sort of price in the next move down towards the non-farm on Friday. Before we get there, we've got ADP non-farm employment change. Now they came at 128,000 last month, whereas the non-farm payroll NFP came in at 390. So there's big disparity between those two readings. Looking to see if they can kind of come closer this week, with the ADP expected at 200K. I'd imagine last month's reading will also get revised higher. And then we're looking down to Friday. We've got non-farm payrolls expected at 275,000. We might miss that and come a little bit lower and maybe get a revision lower from the previous month. From the data that we've looked at before, we've seen that the ADP and the NFP basically merge together. They kind of contract towards each other. So with it being that far apart from the previous month, I think we're going to see a moderation there. We've got FOMC member Bullard speaking on Thursday. We've also got the ECB minutes release. Not expecting much from either of them, but obviously if we're waiting for the US dollar to move, it might not until after the FOMC members stop speaking. Friday, we've got ECB President Lagarde speaking, probably going to just reiterate what was said in the meeting minutes from the day before. And then, like I said, we've got non-farm payrolls in the afternoon on Friday, along with the average hourly earnings month over month. Not expected them to see them spiraling higher. So if they were to come lower, that would be deflationary. If we see them surprise the upside, that would be inflationary. Not really expecting much in terms of the unemployment rate. Probably coming in at 3.6. So the Fed aren't really worried about jobs data, so nor should we. So if we do see a slight moderation in the NFP, I don't think that's going to affect the markets that much. It's all about inflation and price stability. Just looking through this morning's headlines, we can see that Gazprom has not booked transit capacity for exports via the Yamal Europe pipeline for 12 months from October the 1st, 2022. So this is where the European push to stop using Russian energy is going to come into effect. With looking like October is when there's a big cutoff. Other than that, going to the active trader platform, looking at Australian dollar versus US dollar. Looking here, we can see that the Australian dollar is still trading within Friday's range, but it does look like it's going to try and get back above the 0.69031. at which point it comes into a balance area around the 0.69 up to 0.7. If it was to break through the 16th of June's high based on the 50 basis point rate hike, then it's got this imbalance all the way up to 0.72 and possibly to test the daily 200 period moving average. If you look to the right on the 30-minute chart, there's not a lot we can do in terms of our strategy at the moment. We're waiting for this price action to unwind so we can sell the rips. If you look to the left, we've got 65% of traders trying to go long. So the higher that number gets in terms of bullish sentiment, the more likely we are to start looking to sell the rips in the future. Going to the euro versus the pound, that's grinding higher. It's in like an uptrend, but it's just really horrible, choppy price action. So not looking to trade that. Euro versus the yen. Obviously, the yen is the weakest currency across the board at the moment, along with the Swiss franc. So we're looking to see if we can get the euro versus the yen back above this triple top here. See if we can start trading 145 in the future. At the moment, on the 30-minute chart, there's nothing to do. Price actions underneath the 200 period moving average on this chart. So until we get back above this 9 period moving average on the daily, so around 142. Back above the 200 period moving average on this 30-minute chart, then we can start looking for a long then. Euro versus US dollar. Last Friday, we had a winning trade. So we went short based on the 8 o'clock open on Friday. We'd use that candle as the signal candle, took it back up to the moving average, went short, hit TP1, took profits there, got to break even on the stop loss on the remainder, and then hit TP2, at which point this big push down at 3 p.m. hit the 5-day average daily range. And then there's nothing really to be done below that. Just waiting to see now if we get a reversal at any point this week, possibly off this dynamic resistance from the 30-minute charts, 200 period moving average, or potentially one of these daily lows. So if we go to the 27th of June, maybe the 28th of June, then we've got these daily lows which need to be tested. I don't think we're going to get back above the 1.06, but if we do, then that clears that sort of resting orders there, and then we're quickly back up to 1.07. If we were to get back above the 1.08, that could be sort of deemed a reversal in market structure. But we've got relatively equal lows here. We've got almost a triple bottom down there. So I am expecting the euro versus US dollar to come lower at some point. Pound yen, very similar to the euro yen. Just looking to see if we can get back above the 9 period moving average on the daily. Looking to see if we can start attacking the 168s to 169s and then up through the 170. Pound versus US dollar. Like I said, the euro versus the pound is going higher but choppy. Not really expecting much from the pound versus US dollar because the Bank of England are unable to get any strength into this currency at the moment. Maybe it's a good thing. Maybe a weaker pound is good for British exports, so manufacturing will be doing well. At the moment, though, just looking to see if we can take out a swing low from the 29th of June or possibly the 14th of June. I don't think we're going to get back above 1.23 towards 1.25 at any point this week. New Zealand dollar versus US dollar is actually moving faster than the Australian dollar versus US dollar. We've taken out Friday's high already, making higher highs, higher lows on the 30-minute chart. On the 30-minute chart, they found a support at the 200 period moving average. Just looking to see if we can carry on taking out swing highs and daily highs. Dollar versus the CAD. Dollar's coming lower versus the CAD, so we'll expect to see commodities like WTI and Brent going higher. Dollar versus Swiss. Obviously, we saw the Swiss inflation data out this morning. It hasn't really had much of an effect on the dollar versus Swiss franc. If that was to go higher, then we could possibly go back up to parity, take out the 1.01 and a double top up here, and then that would sort of help push the euro versus US dollar lower. And the dollar versus the yen, a bit like the euro, and pound versus the yen, just waiting for a close back above the 9 period moving average. See if we can take out the relatively equal highs around 137, and then see if we can start looking for longs on the dollar versus the yen this week. All right, going to the indices, got a short on at the moment with the German DAX See here, it's trading underneath the 9-period moving average. Price actions making lower lows, lower highs. So we're in a downtrend on the daily time frame. We had an inside day on Friday for Thursday's price action. We took out the Friday high, but then came straight back inside. So I am looking to see if that was a false breakout, see if we can start going lower. The signal candle was the 8:30 candle this morning. So we're just trading back up to what could possibly be the 12897 level, and then looking for a reversal back down. And we've got take profit 1 at 12,774 and take profit 2 at 12,697. But I'll be happy with 12,700. Looking at the US, we can see that with them on bank holiday today, not expecting much from the US indices, though they could be just dragged higher by the European bourses. But yeah, at the moment, daily still red at the moment, but starting to make higher highs, higher lows on the 30-minute chart. So nothing we can do in terms of trading on these at the moment. S&P 500, same as the Dow Jones Industrial Average. NASDAQ here on the active trader platform, it's the USA Tech. 64% of traders are trying to go long. So I am expecting to see more downside, obviously with higher inflation, rate hikes, demand being killed by the Fed. I'm expecting another leg lower in the NASDAQ. And if you look to the UK 100, relatively stable. It's been going sideways essentially since the start of 2022, kind of in the middle of the range. Just looking to see if we can get back above the 28th of June's high, and then potentially bounce off the 7,600 again. But yeah, not a lot we can do at the moment in terms of equities. It was just the German DAX, which looked like it was going to be a continuation to the downside. So that's kind of what I'm looking for. Fingers crossed we can get stocked out. And then with commodities, gold looking for lower low. We can take a short based on this candle here. If I had more funds, bigger account, then I'd go short here. I'd be using this candle here as my range, looking for a reason to get short. So if we were to get short right now, then we would be looking for a risk reward of 1 to 2. So we'd be looking for a push down towards the 1800. So that's something to bear in mind. The higher we can get to this 9-period moving average, the more likely you are to get down to the 1800, but with a greater risk to reward. Silver, if you look to the sentiment indicator, 88% of traders are trying to go long silver. So we are expecting to go short. And if you look to the daily chart on silver, it's just collapsing now. We are expecting to see this retracement here, this little compression to break down to down towards $19 per ounce. And then if we look at Brent, in the sort of range, we've got the low here from 29th of June. Then we've got the 30th of June, so that's Thursday. So Wednesday's high. Wednesday's high is the swing high. Wednesday's low is the possible resistance level. Just waiting to see if we break out through Friday's high here, or whether we sort of stay within it and then just make a new lower low. We haven't made a new high on the daily chart since we got this 29th of June, which was a reversal. So at the moment, thinking we're going lower, just need to actually see it happen. And then nat gas, big push up, obviously on the 21st of June, just seeing if we backfill that down to 4, or if there's some sort of reversal now, and this is like a bull flag. So if that's a bull flag, then we're looking for an equal measured move of this pole above wherever it breaks out. So that's kind of what we're looking for on the commodities, equities, and Forex. Like I said, I think the pivot this week is going to be FOMC meeting minutes, but the focus is going to be the non-farm employment change, even though I don't think it's going to be as important as the inflation data that comes out later on this month. Right, good luck this week. I'll speak to you again tomorrow.